If I was buying Tom Brady's house, this is how I would finance it. Welcome back to the channel. Today we're going to have a look at the fascinating thought experiment of how would someone realistically finance a $150 million mansion like Tom Brady's jaw-dropping estate on Indian Creek Island in Miami. Buckle up, baby, because we're exploring the advanced financial strategies that the ultra-wealthy use to make luxury purchases without breaking a sweat. Let's start with the property itself. Brady's newly completed estate is located at 26 Indian Creek Island Road, in the heart of what's often called the billionaire bunker. And yes, we've done a bunker video. Have a look at that one. The property includes a 2-story main house, separate gym, cabana, sports courts, and an impressive pool. It's spread across a 2-acre waterfront. A property like this not only offers unparalleled luxury, but also prestige. Just have a look at your neighbors. Jeff Bezos, Ivanka Trump, Jared Kushner. So, Indian Creek Island, Miami, 2 acres, offers over $150 million. This could become one of the most expensive single-family homes in Miami history. But how would someone finance this? I know how to do it. Why would you borrow instead of paying cash? This is often the way wealthy individuals would buy a mansion outright and would always look at borrowing rather than paying cash, unless you have billions and billions of cash. The answer is very simple. It's opportunity cost. Wealthy individuals don't want to tie up $150 million in one asset, even a prime real estate property. Instead, they will keep their money working for them in investments that often yield higher returns than the cost of the borrowing. When you borrow against existing assets, you're increasing your liquidity and diversification. One of the most popular strategies that we see is securities-based lines of credit. This can either be a single stock loan, which is the cheapest way to borrow anywhere in the world right now, or a blended facility across a portfolio of assets. A single stock loan will allow you to borrow against whether it's Microsoft, Apple, Google, etc. You would literally transfer your stock to a specialist lender who will lend you from a period of 18 months to 5 years at pay rates from 3.25% against that single stock. This will give you liquidity and cash that then can contribute towards your luxury Miami purchase. The other way when looking at investments is margin lending and Lombard lending. This would be a margin over the cost of funds depending on the currency that you borrow in. If you're a dollar-based investor, you'd be borrowing against dollars. A Lombard loan or a margin loan is where you custody the investments on one side of the balance sheet and the private bank normally would then lend on the other. This line of credit will typically allow you to borrow between 50 to 75% of the portfolio's value. When interest rates are low, this is often much lower than traditional loans. A traditional jumbo mortgage in America would have margins from 1 to 3%, depending on the loan to value and the liquidity in the underlying asset. So if you've got single stocks or a share portfolio totaling $180 million, you could borrow 60% of the value at interest rates between 3 and 5%. Here's why this is genius, because you can then avoid triggering capital gains taxes because you haven't had to sell your assets to make your dream purchase a reality. This will also allow your investments to keep growing. This will give you the liquidity you need for a purchase like Tom Brady's home. When there is market volatility and if your portfolio value were to drop, you may face a margin call. Lenders can demand repayment or additional collateral to maintain your position. So the two cheapest forms of borrowing are single stock lending and margin lending when looking at making such an unbelievable purchase as Tom Brady's home. Margin loans have often been used to buy securities, but they can also fund other purchases, which includes real estate. Yes, you could also buy a jet or a yacht in this way. The key differences are that interest rates on single stock lending is much cheaper than margin lending. The loan to values on a single stock can be as high as 70%. And when you look at margin loans, a normal range is from 40 to 70%, depending on the underlying liquidity of the assets within the portfolio. If you had a portfolio of investments of $200 million and you were looking to borrow 50% of the value, that will then raise $100 million towards your purchase. But margin lending and single stock lending do come with greater risk. If the market corrects or dips, you may have to sell securities to cover the loan position, potentially at a loss. High net worth individuals rarely rely on just one method. Instead, they often use a blended approach. And what I mean by that is they will combine a margin loan, a single stock loan, and a traditional jumbo mortgage from a private bank to enable this purchase to take place at $150 million. This diversification across a blended portfolio of loans is the best way to make such a purchase. This approach diversifies the risk and optimizes interest costs while maintaining liquidity for other investments. And when looking at real estate investments, one of the key things is not just buying the mansion, it's the location. Indian Creek Island is one of the most exclusive neighborhoods globally, with only 40 homes and a private police force. Property values here have skyrocketed. For instance, a neighboring vacant lot that sold for $27.5 million in 2018 is now listed for $200 million. Purchasing here isn't just about luxury living, it's a strategic investment. Of course, even the wealthiest buyers need to consider risks. There are some strategies which help mitigate those risks. You can diversify your collateral, avoid tying the loan entirely to one asset type, as I've mentioned before. Keeping a buffer and having cash reserves to cover margin calls is critical. You can lock into fixed rates where possible. This will allow you to plan your cash flow on future payments. It would also protect you against any potential rising interest rates in the future. So if I was buying Tom Brady's mansion at $150 million, I would probably go with a blended facility of a single stock loan, a margin loan over my portfolio of investments, and the balance will be topped up with a traditional jumbo mortgage. This keeps my investments growing, minimizes tax implications, and optimizes my borrowing costs. That's how you, as the ultra wealthy person thinking about buying this Tom Brady dream home, should think about your money. If you enjoyed this breakdown, hit that like button and please subscribe because it really helps enormously the growth of our channel. Until next time, stay wealthy, healthy, and be strategic with your wealth. Thank you for watching.